All right, let's jump right in. Today we're tackling Indonesia's economic outlook for 2026. And it's a year defined by this incredible tug-of-war, between huge global pressures and some really significant domestic promise. It's a super complex picture, so let's break it all down. So here's how we're going to tackle this. We'll kick things off with the big picture, the external forces at play. Then we'll zoom right into Indonesia's specific challenges and some of its surprising bright spots. After that, we'll get practical and look at what this all means if you're an investor. And finally, we're going to zoom way out and talk about the massive climate trend that's going to shape things for decades. Okay, first things first. We've absolutely got to get our heads around the global storm that's brewing right now. Because really, this context, it sets the stage for everything else that's happening inside Indonesia. And a huge part of that uncertainty? Well, it's coming from the full rollout of U.S. reciprocal tariffs, which really kicked into high gear in 2026. I mean, this move essentially made global trade way more expensive and a lot more complicated, and those effects are rippling out across the entire world economy. This whole policy thing led to a really fascinating, kind of weird phenomenon back in 2025. It's called front-loading. Basically, you had exporters all over the world who saw these tariffs coming, so what they do? They decided to rush as many shipments as they possibly could into the U.S. before those new higher costs hit.
And check this out, you can actually see that strategy playing out right here. This chart is tracking exports from a bunch of different regions into the U.S. Now, if you look at that blue line, that's Indonesia, you see this massive spike, right? Right there in July of 2025. That's just 1 month before the tariffs officially went into effect. That right there is front-loading. It creates this artificial and totally temporary boom.
All right, so let's shift gears and see how all this global pressure is hitting home right there in Indonesia's domestic economy. Because, after that artificial high, reality is definitely starting to bite.
And one of the first places you see the impact is in the flow of money, investor confidence. With all this global uncertainty making currency markets go wild, we've seen foreign investors pretty much hit the pause button, but what's really striking is the contrast. Domestic investment has just surged. Up 30%. It's stepping in to fill that gap and really prop up the economy.
Now, this economic pressure isn't just some abstract number on a spreadsheet. No, it's being felt directly by families. Just look at this chart. It shows real wage changes. In huge sectors like manufacturing or industri pengolahan and construction, construksi, wages, well, after you account for inflation, they've actually gone down. And since these sectors employ something like 75% of the workforce, that means a whole lot less spending power for millions of people.
So, the big question is, how's the government responding to all this? Well, we're seeing a massive pivot in their budget, a huge fiscal shift. You can see it right here in this breakdown. A ton of money is being moved into social programs. Just look at the free nutritious meal program. It now makes up 44% of the entire education budget, the Anggar and Pendidikan, all to help support households and keep them spending. And this next chart just brilliantly illustrates the trade-off, right? To pay for all these short-term support programs, spending on goods has absolutely skyrocketed. We're talking almost 50%. But it's come at a cost. Long-term capital spending on stuff like infrastructure, that's been slashed by over 20%. But the story isn't all gloom and doom. Not at all. When we start digging into specific sectors, a much more complicated picture comes into focus. It's really a tale of two economies, with some areas seeing just incredible growth, while others are seriously struggling. So on the one hand, you have the government's big strategic push to process its raw minerals at home. You might have heard of this policy. It's called downstreaming. Well, it has absolutely ignited the basic metals industry. It's grown at a staggering 16%, mostly thanks to Indonesia's massive nickel reserves. But here's the thing. This type of growth reveals a major structural crack in the economy. See, this kind of industry is super capital intensive, which means it doesn't actually create a ton of jobs. Think about it. For every $1 billion you invest, the basic metals sector creates maybe 3,000 jobs. Compare that to the food industry, where the same $1 billion creates nearly 19,000 jobs. Big difference. And that creates this really stark and frankly painful contrast with the more traditional, labor-intensive sectors like textiles and apparel. These are industries that employ millions of people, and they're facing huge layoffs, just unable to compete with this flood of cheap imported goods. Okay, but amidst all these challenges, there is one undeniable, incredibly powerful bright spot: Indonesia's digital economy. It is just continuing its amazing growth trajectory.
It hit $99 billion in 2025. And look at this, it's overwhelmingly dominated by a massive $71 billion e-commerce market. Just incredible.
So let's take a breath. We've got this incredibly complex picture, right? Booming metals, struggling textiles, a government shifting its spending. So what in the world does this all mean for you if you're an investor? Let's break down the practical outlook for 2026.
Okay, the big thing to watch here is interest rates. The consensus is that central banks around the world are going to start lowering rates, and that creates a pretty positive outlook for both fixed income and equity funds. Why? Well, lower rates tend to push bond prices up, and they can help boost company profits, which makes stocks look more attractive. And of course, money market funds, they're still your stable, defensive choice in all this.
So how do you even navigate an environment this volatile? Well, the expert consensus really points to 3 timeless strategies. Number 1, diversify. Don't put all your eggs in one basket. That's always risky. Number 2, make sure your investments are actually aligned with your personal goals and your timeline. And number 3, be consistent. Investing regularly, even small amounts, can really help smooth out those bumps in the market that are, let's be honest, inevitable.
Really, the key takeaway for anyone investing in 2026 is just to stay vigilant. You got to keep a close eye on these 4 major risks. Just general market volatility, any geopolitical flare-ups, unexpected moves in interest rates, and of course, big swings in currency values. Any one of these could have a huge impact on your portfolio. Okay, for our last section, let's zoom all the way out. I mean, way beyond the short-term noise of 2026. Because there is a massive global trend that's going to shape Indonesia's economy, not just for a year, but for decades. And that is the energy transition.
You know, regardless of what happens in short-term economic cycles or with political shifts, market forces are just relentlessly pushing the world towards decarbonization. This really isn't a question of if anymore. It's a question of how fast. And it's creating entirely new markets while completely reshaping old ones.
And this chart, wow, this really brings to life what that actually means for Indonesia. It shows the decarbonization potential across different industries. You can just see the massive opportunities for transformation and for leadership in sectors like utilities, mining, and manufacturing. I mean, all of these are absolutely critical parts of Indonesia's economy. But ultimately, as this quote from Core Indonesia points out so well, success isn't going to come from just focusing on one sector in isolation. A truly sustainable and prosperous future, that's going to require a cohesive strategy that links all these different parts of the economy together.
Which leaves us right back where we started, with the central question for Indonesia, as it stands at this critical crossroads. You have a nation with just incredible resources and potential, but it's facing some seriously powerful headwinds. So, for 2026, which force will prove stronger? The promise or the pressure?